Hey everyone, it's Nick Jerusalem here with the Jerusalem's Happy Home Team with a look back at what the heck happened in Seattle real estate for last week, March 16th, because it's been a doozy. So starting with Sunday night, the Federal Reserve announced they were going to be meeting Tuesday, but kind of held a sudden press conference that they reduced the federal funds rate to 0 and 0.25%, which is the lowest it's been in recorded history for the United States. It's important to note that the federal funds rate doesn't have a direct impact on your mortgage rates. It's more tied to things like your credit card or car loans, things like that, but it's designed to help try to lower the cost of borrowing to stimulate the economy. And so you see them kind of pull this lever in similar situations where they need a little economic boost. On top of that, they also announced that they're going to purchase $500 billion with a B in Treasuries and $200 billion in mortgage backed securities. Similar liquidity measures to this we're seeing like back in 2007 and 2008 with the quantitative easing program that they were doing. But this is also to help prop the banks up so that they have enough liquidity on their balance sheets so they could turn around and lend to consumers. Stock market volatility was insane. Last week literally saw the two largest single day losses since 1987, and also the largest single day gain since 2008, all within the stretch of a week. So it's been a wild volatility, and with that has led mortgage rates to bounce around a bit, but there's been some kind of technical things that have been keeping those in check from doing what they might normally do from a technical standpoint. Mortgage refinance applications and mortgage loan applications increased over 500% when rates hit all-time lows a couple weeks ago. So there's just no way the banks can keep up with that kind of influx of new demand. And so you're seeing that rates aren't necessarily hovering as low as they could be because they're trying to play some catch up. And so we'll see kind of where things trend from moving on from here, but it's anyone's guess right now in terms of mortgage rates at the moment, but they're still hovering in near all-time lows, in the mid to upper threes. So historically speaking, we're still well below where things would usually be. And then for last week, there were 2,239 new listings in the entire multiple listing service. There were 2,500 pending sales. The week prior to that saw about 1,500 new listings and about 2,500 new pending sales. So prior to last week, we were pretty much seeing every week there were almost 1,000 more homes selling each week than there were new listings coming on. And that was going on since about December. So this is kind of the first time we've seen that shift. Part of that, presumably would be some seasonality that, March and April is usually when you see the largest amount of new listings coming on the market. Weather's getting nicer. People are trying to be timing things for the spring market. But the pending sales aren't necessarily surging upwards. And so whether or not that kind of slowing growth of pending sales is related to the global events, it's still a little too early to say. We're tracking all the key box activity and showing traffic as well, just to kind of give it a minute by minute read on what's going on in the market. So if you're curious to see how this all plays into your plans, shoot us a message. We're always here to help. And you can also visit us online anytime at happyhometeam.com.